there's still a lot of very hot earnings charts out there, companies with great earnings surprise track records that maybe might be on sale now. What are these companies? I brought 5 of them, so let's take a look and see. The first one is Ford. Yes, the auto manufacturer, ticker F. Look at that chart. Wow. Red hot shares and huge earnings surprise beats. That's what this long green arrow is. Last quarter, we had 82% beat. After these beats all in a row, the analysts still didn't get it right. Shares busting out to new multi-year highs there in 2021 and to start 2022, but they pulled back here like everything else in the market. Still only down about 6% year to date. That's still not too bad given what some other companies are doing, and we're going to see some of those in a minute. But this stock is still fairly cheap, trading only around about 10 times forward earnings. So is this a buying opportunity? Even on a 6% pullback, we will see. Then we're going to switch over to Snap. This was a hot one as well off of the pandemic as we all went on social media. So these stocks did really well. But now it's started to pull back because people are thinking with the reopening, we won't be on social media as much. Now, interestingly, Snap has a very good earnings surprise track record, just 2 misses since it went public there in 2017. This is a great record. And even last quarter, it too had a very big beat here, 183% there. But that hasn't stopped the shares again from declining, probably based on valuations. So over the last 6 months, shares are down 59%, and even year to date down 35% here, but still trading at about 60 times forward earnings. So this is the concern with some of these, even though they have the good earnings surprise track records, is really valuations. And another one of those that has been very hot is the software side. So I chose Unity Software here because look at them. They have a perfect record too from going public there in 2020. It's been a little more of a roller coaster here, but busting out to new highs towards the end of 2021. But it's been a severe sell-off here. Over the last 3 months, these shares are down 37% and still down 33% here year to date. It does not have a PE, so it is not making profitable earnings right now. And this is the type of company with no PE that is really in danger here during this earnings season, despite this track record. That's why you continue to see weakness in these shares. But I will be tuning in to see what they say for this quarter and whether or not these shares can get a bit of a bounce off a solid earnings report. Then we're going to switch over back to social media with Pinterest. PINS is the ticker. I used to own it in the value investor portfolio, and we sold it last year. And I used to own it in my own personal portfolio, but I sold it too. But these shares, as everyone knows, have been on just basically a huge slide over the last 6 months now, down 62%. Year to date, down still 26%. But they have this good earnings surprise track record, and they beat 6 quarters in a row. And some of these, though, this is the worry, the beats have been getting a little smaller here on this last quarter, and they're worried about user growth, which did decline in America, which is its most profitable market last quarter. So then you continue to see the slide. But are the shares on sale here? They're trading at 19 times. That's down considerably from where they were at in 2021. So could be a value here again. Maybe I'll have to be looking at it for the value investor portfolio again if we do a round trip. But this is a Cathie Wood stock, and I know many of you are in it, so this is one we're all going to be watching. Then we're going to wrap it up with Deckers. Deckers Outdoor, DECK. You know them better as UGG and Hoka 11. Now, this is the holiday quarter. It should have been good, right? But they've got a great earnings surprise track record. You can see just one miss way back here in 2017, barely missed, only by 3%. And then you did have this barely miss last quarter, just 0.54. That's probably like a penny. That's nothing, but supply chain issues could be really hitting. Were they able to get the shoes and the accessories into the stores and into the consumers, homes for the holiday? That's why these shares are sliding, because the street thinks maybe they weren't. So year to date, they're down about 17% over the last 6 months, now down 25%. Shares have come down on valuations, down to just about 20 times. That's not super cheap, but for Deckers, it's on the cheaper end. I'd like to see it go below 20 before I get interested. Will it with the top brands? I don't know. I'm a little dubious. So this is definitely one of the major retailers, the hot ones. I mean, look at that chart, that you're going to want to be watching for this week's earnings. So there's a lot going on, not just this week, but it will continue for the next several weeks. And you don't want to miss a single earnings all-star video, because I'm going through all the charts so you don't have to. And there's a lot more to come up with the small and mid caps joining in on the earnings season. And we're going to get a lot of those retailers where we're all interested. And on the energy side, we've only had a couple of the big oils. We're going to start to get a lot of the smaller exploration and production companies. Those are going to be hot ones too. So be sure to subscribe to get all of our earnings all-stars videos. You can get them on Zacks.com/YouTube, but get them somewhere. And I'll see you again next week with some more earnings charts.